Welcome, learner, to another deep dive. We know wading through financial reports isn't always fun.
Definitely not. So we've done that bit for you.
Exactly. Today, we're focusing on Anant Raj Ltd, specifically their financial year 2025 results.
And we've looked at, well, the whole lot, the official results, board meeting notes, the auditor's report.
Even some questions we've been kicking around ourselves based on the data.
Right. The goal here is pretty simple.
We want to unpack what really matters from all this, give you a clear picture of how Anant Raj performed and, where they stand financially.
So this is tailored for you, learner, your express lane to understanding Anant Raj's FY25.
All right, let's jump in. The headline numbers for the full year. What really stood out?
Well, the revenue, first off, it hit 2,059.97 crores.
Which is a pretty big jump from FY24, right? That was around 1,483 crores.
Yeah, a substantial increase, nearly 40%. It really makes you stop and look.
What do you think is behind that kind of surge? Big projects coming online?
That's the likely story. Either strong ongoing demand, or successful completion and handover of key projects. It suggests things are moving well.
But is it sustainable growth? Or just a particularly good year?
That's the million-dollar question, isn't it?
Yeah.
We need to see their pipeline, their sales bookings for clues on that.
Makes sense. And did this revenue boost flow through to profits?
Oh, absolutely. Profit after tax, or PAT, also saw a really significant leap.
How big are we talking?
It climbed to 425.82 crores. That's up from 265.93 crores the previous year.
Wow, okay, so not just selling more, but potentially selling more profitably.
Exactly. It could point to better margins, maybe a shift to the types of properties they're selling, or just good cost control, operational efficiency.
Interesting. Okay, let's maybe zoom in a bit. How did things look in the final quarter, Q4 of FY25?
Q4 continued the positive trend. Revenue from operations was 540.65 crores.
How does that compare to, say, Q3 or the previous year's Q4?
It was a slight increase from Q3's 534.64 crores, but a much bigger jump compared to Q4 of FY24, which was 442.59 crores.
And the profit for Q4?
Also up. It hit 118.79 crores. That's better than Q3 and significantly better than the same quarter last year.
So finishing the year strong then. Consistent upward movement.
Yeah, that's a fair assessment. It definitely points towards solid momentum carrying them through the end of the fiscal year.
Okay, let's shift gears slightly. Dividends. Always something investors watch closely. What's the plan there?
The board's put forward a recommendation for a final dividend. It's 0.73 per equity share.
73 pays. What does that signal, usually?
Well, it's 36.50% on the face value of euro. Generally, proposing a dividend like this shows the board feels pretty confident.
Confident about the cash situation and maybe the future outlook.
Precisely. They feel they can reward shareholders but still have enough fuel for growth. Of course, it's not final yet.
Right. It needs the shareholder thumbs up at the AGM. Good point.
Always an important caveat.
Now, something caught my eye regarding business segments. The official report says, single reportable segment, real estate development.
Standard classification.
But some of the analytical questions we saw hinted at other activities, like commercial leasing, hospitality, maybe even industrial parks.
Ah, that's a nuance worth exploring. It's quite common, actually.
How so? Seems contradictory.
Think of it this way. A company might primarily be, say, a car manufacturer. That's their main segment.
Okay.
But they might also have a financing arm, or maybe sell merchandise, if those other bits aren't big enough financially, according to accounting rules.
That just get rolled up into the main car manufacturing segment for the top-level report.
Exactly. So Anant Raj's main business is developing and selling property. That's the umbrella.
But they could still be making money from leasing out office space they own or running a hotel, maybe?
Precisely. Those activities exist, but might not meet the threshold for a separate segment reporting yet. If you want that really granular detail, you often need to dig into investor presentations or listen to the earnings calls.
Got it. That clarifies things. Thanks. Okay, let's talk debt. Always a big factor. How are they doing on that front?
This is definitely one of the highlights, I'd say. A real positive.
Oh, yeah. What do they manage?
They significantly cut down their qualified borrowings over the year. Started FY25 with about 555 crores.
And ended with?
Ended March 2025 with 388.47 crores.
Wow, that's a chunky reduction. Was that nearly 30% down?
Roughly, yes.
Okay.
Substantial came from their large corporate filing detail.
And the benefit there is pretty clear, right? Less debt means
Less interest to pay, obviously,
Uh,
but also it just gives them more breathing room, more financial flexibility, strengthens the balance sheet. It's a good move.
Absolutely. A stronger foundation. And what about the other side of the coin, cash? Did that improve too?
It did, yes. Their cash and cash equivalents went up
From where to where?
from about 305 crores at the start of the year to 330 crores by the end of March 2025.
So, reducing debt and increasing cash reserves. That sounds like a healthy position.
It certainly suggests good financial management and stability. Having that cash cushion is important for seizing opportunities or just weathering any potential storms.
Okay, so the numbers look good, debt is down, cash is up. But how reliable are these numbers? What did the auditors say?
That's where the auditor's opinion comes in. Mrs. Ranjana Vandana and Co. reviewed the books.
And the verdict?
They issued an unmodified opinion for both the standalone and the consolidated results.
Unmodified, which in layman's terms means.
It's basically a clean bill of health.
Mhm.
The auditors are saying, yes, these financial statements give a true and fair view. They're prepared according to the accounting standards.
So, no major issues found.
Exactly. And the MD, Emmett Sarin, also put out a declaration confirming this clean opinion. It adds a layer of confidence for investors and anyone else looking at these figures.
Good to know. Were there any other sort of corporate actions during the year that might have affected the finances or share structure?
Yes, a couple of things worth mentioning. First, they allotted some new shares back in March 2025.
How many?
About 1.37 million shares from warrants being converted. It slightly increased the paid-up equity capital.
Okay, a minor adjustment then. Anything else?
More significantly, I think, was the redemption of non-convertible debentures in NCDs.
Ah, related to the debt reduction.
Directly. They redeemed 116.50 crores worth of NCDs during FY25. That was a key part of bringing that overall borrowing number down.
Right, makes sense. Now, we've mostly focused on the consolidated results, the whole group picture. How did the main company, Anant Raj Ltd itself, perform on a standalone basis?
Yeah, it's useful to see that comparison. The standalone revenue from operations for FY25 was 1,228.6 crores.
Okay, so significantly lower than the consolidated 2,000 plus crores we discussed earlier.
Correct. The consolidated figure includes the performance of all its subsidiaries, associates, joint ventures, etc. Looking at both helps you see the parent company's direct contribution versus the group's total effort.
Understood. Finally, looking ahead. These documents are great for understanding the past year, FY25, but what don't they tell us about the future?
That's a really important limitation to keep in mind. These reports, the results, the board outcomes, they are backward-looking by nature.
They tell us what happened up to March 31st, 2025.
Exactly. They don't typically contain detailed management forecasts for the next year, FY26, or spell out the company's grand strategic plans, or give their view on where the whole real estate market is heading.
So where would we usually find that kind of forward-looking insight?
That usually comes out in investor calls or earnings calls, maybe specific press releases about new projects or strategies, or in the management discussion and analysis section of the full annual report. Those weren't part of the specific document set we dove into today.
Right. So great for analyzing performance, less so for predicting the future based on these docs alone.
Precisely. It sets the stage, but doesn't show the whole play to come.
Okay, learner, let's wrap up this deep dive. So, the big picture for Anant Raj in FY25 seems, well, pretty positive.
Yeah, the key takeaways are definitely strong growth revenue and profit, both up substantially.
Q4 performance looked solid, continuing that upward trend.
They're confident enough to recommend a dividend,
And crucially, they made real progress on reducing debt.
while also building up their cash reserves. Plus, a clean audit opinion adds credibility to it all.
So hopefully you feel like you've got a much clearer handle on Anant Raj's financial position now without having to dig through all the raw data yourself.
That was the goal, a concise, insightful summary.
All right, here's something to maybe mull over. We've seen strong performance. We've seen debt come down significantly.
A good position to be in.
So what might Anant Raj do next? With this momentum and improved financial health in FY26, what strategic moves could they make?
Are they going to push into new geographic areas, maybe tackle even larger development projects, or perhaps diversify their real estate portfolio further?
Lots of possibilities. How might they leverage this strong base? It's definitely something to think about in the context of the broader property market.
And if you want to follow that story, keep an eye out for their investor communications.
Listen to earnings calls if you can. Look at future press releases. That's where you might find clues about their next chapter.
Staying curious and connecting the dots like this really helps build understanding.
Absolutely. Thanks for joining us for this deep dive, learner. We'll catch you on the next one.